Hey, hey.
Hey, folks. Hey, welcome to our live show. Hey, and today we're going to be talking about what we need to do for 2025 to get ready for whatever is coming. So, we have been having a market that seems to have a mind of its own, or I think in this case, maybe no mind at all. Brian, what do you think here?
Well, natural gas and crude oil have different things that are happening in the natural gas is all about weather right now, and crude oil is all about economy and geopolitics. So it is important to stay on top of everything that is happening because we are having dramatic shifts. As a matter of fact, natural gas has moved down 25% since in the last 20 days, and crude oil had to move down over 14% inside of 10 days. So it's important to stay on top of what is happening in the marketplaces, and we have our thoughts as far as how you can do that, but you can do that in a lot of different fashions, a lot of different ways. And and
So,
it's in,
Brian,
hmm,
who are we?
I'll let you answer that.
Folks, Bill and I are, Brian and I have Energy Rogue LLC.com. So energyrogue.com is where you can find us. What we try to do is we try to provide a practical and thorough discussion of the markets for all the energy commodities. And we have a subscription plan that you can join, and you can join Rogue Edge for $89 a month. For with Rogue Edge, you get a list of different things. Mostly, you get a lot of data. And that's not just data. We put some stuff in there that's more like information as opposed to data. We'll talk about what the difference is in that in just a second. And then we have a premium service, which is Rogue Premium, $179 a month. I'm trying to talk too fast, Brian. I feel like I'm trying to sell like Ginsu knives or something. So not only do you get the same data that you would get with Rogue Edge, but you also get access to our Discord channel, which is a private Discord channel of our membership where you can discuss things that are going on in the market in a safe environment. And I promise you, we don't always agree what's going on. And sometimes none of us know what's going on. And so we're trying to figure it out. So it's a good chance for you to learn about what's going on, ask a question, get some advice, not great advice sometimes, but certainly not financial advice. And then what we do is we talk about what's going on, the things, the mistakes we made, the things that we did that worked. And so it'll get you there. You get that, you get a chance to have a private discussion with Brian and I to talk about what's going on with you and what you need looking for. And we sort of help you direct into the data, which data you should be looking at. Then we have the advantage, which is if you really want us to come and help you with your company and do that, we can do that. That is on a case by case basis. We don't have a lot of bandwidth for that, but what we do is we try to help people who are in a bind, and we can talk a little bit more about that. So Energy Rogue is the company that can help you sometimes muddle through, but other times mostly plan through these markets. And it gives you. And you see at the top of there, Brian, we get a lot of our customers who are giving us great feedback. And so you don't have to believe us. We put people up there who tell us what they think. And we look in the financial, we look in the physical, we look backwards, we look forwards, and then we try to imagine even things that we don't even know that's there. What we want to do is take data, because you can get data everywhere. We take that data, we turn it into information. So now, once you got the information, what do you do that? Well, we help you create a strategy. And once you get a strategy, now we want you to help you execute on that strategy. And so the whole idea here is that we want to make you a success, and not necessarily your company, but you specifically a success, and that should bring success to your company.
Yes.
For everything,
And
Brian.
I think so. I think so. And the markets
Oh,
that we cover
oh, so
natural gas, NGLs, crude oil, refined products, electricity, and we cover rigs, supply, demand, imports, exports, storage stocks. and so much more, and we put it
And
into
weather.
affordable
I forgot to
packages.
leave. I always forgot to put in the weather.
Yeah, and that is something that we have a lot of exciting things. We're not going to talk about the weather today, but we have a lot of exciting things on the weather side because that has a dramatic impact on natural gas. But Rogue Edge, most competing packages are over $2,000 a month, and we put all of this information at your fingertips, and then we're just an email away with Rogue Edge. On Rogue Premium, you can actually interact with us in our Discord channel, which we have active for our Rogue Premium members, and we talk about things that are happening in the marketplace, particular levels, spreads, that type of thing. And for people that are hedging or trading, it is a valuable resource because these are people from around the world. We're in 5 different continents. And so we get a truly global perspective of oil, gas, natural gas liquids, refined products, electricity, and the things that impact it, such as weather. And we are fortunate that we go in deep on some of the heating degree days. This is actually taking a look at heating degree days on El Nino and La Nina for Los Angeles. So we get very, very in-depth responses. So we would love to see you if you're serious about it. But we are today going to talk about a 2025 action plan. Now, before I
And by
dive,
the way, if you're the energy services business, you need this information because you need to be able to plan. If you can't plan if you don't know where your customers are going.
right?
So you need this as bad as any producer or end user needs it.
Yep.
And believe me, we do help the end users as well.
Well, I mean, essentially, a lot of people look at our service from a perspective of how to trade, how to hedge, and it is a tool that gives you access to information and developing. It is a resource to develop particular strategies. And what I can see on this particular strategy right here, this on crude oil, this is showing a net difference between our existing decline and newly completed wells. And you can see trends, and these trends point to a downward trend during 2024. We have been creeping back up, but you can also look at it. This is not many barrels per day. It's 40,000 barrels per day. So you can dive into particular regions. A lot of people look at just the Permian, and let's take a look at just the Permian. And Permian is adding, but if you took every other thing besides the Permian on crude oil, you would see we're only marginally adding, and the only one that is actually adding is the Bakken right now. So this helps develop strategies, and these strategies are used in different ways for traders, different ways for producers, different ways for consumers. And so what we wanted to do is throw together an action plan for 2025. It is October of 2024. It is time to start thinking about the remainder of 24 and what's ahead for 25. And we wanted to provide this as a resource. And we are, the comments are live, so feel free to ask those. We will get to them live as we go. But any other thoughts before I move into this, Bill?
No, I think it's also clear to understand is a good example is when you saw the Permian coming up, everybody says, "Oh, well, we're increasing oil." Actually, what that was it was increased natural gas infrastructure that would allow the crude oil to come up.
Right.
And so those are the kind of things we talk about. And so it's not always the most obvious. Sometimes there are other things that affect that type of action.
Yeah, in other words, it's integrated, and that's part of the reason that we, as part of our service, do offer a weekly video where we recap everything that is happening, and Rogue Premium gets videos inside the week. So during the week, we've had people ask questions, and we send them a video response of particular questions. It could be on a trade, it could be on a hedge, it could be on what is ahead of us. So on 2025, let's take a look at what traders for energy commodities need to know in 2025. They need to understand supply, understand demand, dynamics, how those are changing, what are the trends. These are valuable because this helps you understand the basic supply and demand balance. And we actually go in deep on, I'm going to use natural gas as an example, on the balance side. And this was one that we actually created in response to a customer request. So this shows net supply minus demand. And what you can see on this chart is that we are slowly dropping down on our net supply over demand. So that means less production is actually going into storage. So you may have heard a lot of people talk about how we're oversupplied from storage. Well, it's not because we're injecting a lot this year. It's actually because we had an overhang, and that overhang is leftover from 2-week winters and Freeport LNG going down. So a lot of these things, understanding the supply and the demand, but not just what is the supply number today. That doesn't really tell you anything. What is the supply number now versus history and where we're going, which is part of the reason that since we're talking natural gas, let's actually take a look at the net trend on natural gas. And you will see that we have been in, for most of 2024, in decline. Now, this matches up because in December, we were producing 105, close to 106 BCF a day. We're now down to 101. So 101, 102. So you can see that the net gas production has been in decline. However, it is starting to point back up, and we're still net losing about 300 to 400,000 BCF, not 300 to 400,000 or 0.3 BCF each month. And then we cover things like the frac spread, but that is where we are right now. So understanding supply, demand, and dynamics of those. And if you're not understanding that, then you are going to trade uneducated. And if you are a trader, you need to know supply and demand dynamics. You also need to monitor. Oh, go ahead, Bill.
I'd say part of that is also the understanding at what price do certain basins come back on, because these are not just algorithmic trading. This is actually understanding when at a certain price you might see the Haynesville come back on. So we track where the rigs are, and they're sort of a leading indicator. They there's some nuances to it, but so understanding supply and demand dynamics is not just understanding what's happening now, what's going to happen in the future, and when are the change points in that.
Right. And that's part of the thing that we discuss actively in our Discord channels, such as the Matterhorn pipeline out of the Permian, which has come on this year and added a lot. Since we cover crude oil, natural gas liquids, refined products, and electricity, monitoring geopolitics, weather, and other rapidly and slowly moving changes. So these are valuable in understanding kind of the dynamics. Geopolitics typically are moving slow, but then you have something like the Russia-Ukraine war, Iran attacking Israel, or Israel potentially responding. These things will happen fast. So it's understanding the slow-moving dynamics and the fast ones. And the fast ones include weather for natural gas, geopolitics for crude oil, but it also has to do with the underlying supply and demand dynamics. So if you think about it, you're building a layer. If you understand supply and demand, where we are today, where we were yesterday and where we're going into the future, that lays the foundation for where we might be going into the future. So that direction is going to be key. And then understanding what is happening beneath the surface that influences it. Geopolitics. One of the reasons that we talk about geopolitics is we actually discuss the geopolitics in reference to this. Let me show this to you. If it's gonna load up here. So there we go. The vessel filters. Okay, the filter's not working, but we cover and touch on geopolitics in our videos and in our communication because of things like if Israel attacks Iran, what does that do to the crude oil supply? Well, 30 to 40% of the global supply goes through the Strait of Hormuz, 20% on the Strait of Hormuz, but then another 8 to 15% goes through the Suez Canal and into the Mediterranean. So 40% of the global supply is impacted by these conflicts. And that
So,
is, yeah.
in addition to all that, we talk about on geopolitics what's going on in China as far as the economics in their economy, what their demand is looking like that. And because they are a major demand, the other major demand person we look at is India. A lot of times India gets left out and we don't pay attention. And there's a lot of stuff that's going on in India, and they could actually become a bigger demand um, country than China. Mainly, I know this is hard to believe, but they now have more people than China.
Mm.
And so, and they have more people moving up into a middle class, which means they're going to have a higher demand for energy. So these are the things that we talk about. And so if you're a trader, you need to understand where are those breaking points on those political issues, and how's that going to affect? And if we're oversupplied, does it really affect it at all, or does it not affect it? If we're undersupplied, how fast is that going to change? And so it's those quick spikes that always get us.
Right. And seeing some of these rapid changes and slow moving changes and tracking things like the frac spread, which is an important variable to watch. And if you're not watching things like that or the drilled and uncompletes, how much cumulative drilled and uncompletes do we have? And you can see this trend. Our drilled and uncompletes, we've been working off an inventory and we are down. We still have, close to 6,000 wells that could be completed, but they get completed for different reasons. So understanding
Right.
these and then moving to regulatory and policy. This is where things like the Inflation Reduction Act come into play. What would that do to natural gas? What would it do to crude oil? How much would that impact crude oil? Quite a lot, actually. So the
Right.
regulatory and policy changes, these are important. Technological advancements. If you just look at the news one particular day, you will be convinced that EVs have displaced crude oil. Well, I just heard from a respected international energy advisor that if you look at the amount of EVs that we have, how much crude oil demand have we displaced? Now, as a starting point, crude oil globally is over 100 million barrels a day of supply and demand. It's debatable how much supply, how much demand, but it's just north of 100 million barrels a day. There are 60, I forget the number of EVs, but the number of EVs has displaced probably 1 to 1.5 million barrels a day.
So that's optimistic.
And that is over the last 5 or 6 years. And when you look at these numbers, if you just read the articles, if you just focus on headlines, you are not looking at the underlying structure of what is happening behind the prices. And if you're just looking at the prices and say, well, that's what it is, well, that's what it is today, but where is it going tomorrow? And that feeds into market sentiment, investment flows, technical analysis, all of these. This is your building blocks. These are the things that you need to know. Now, there's different, we're not going to dive into tools. If you reach out to us, happy to connect with you, or if you join our service, would happy to come up with a plan with you. But understanding these, understanding supply, demand, the slow moving, the regulatory, technological advancements, the market sentiment, the technical analysis, all of this is the reason that we designed energyrogue, because we dive into the technical side of the business. When we look at our technicals right here, we actually evaluate these, put them into signals, so that you can make your choices on what is happening from a technical analysis perspective, a weather perspective, understanding supply and demand. That is actually one of the simplest things to do. But then the geopolitics, weather, regulatory, policy, technological advancements, those are all going to be nuanced. So you can't just read a headline and come to determinations there. This is part of the reason that we provide our weekly videos. This is part of the reason that we provide our content during the week, our reports and our PDF reports, and opened up our Discord channel so that we can all talk about it, because I learn something new every day.
Right.
So that's what you need to know. And if you, as a result of the need to know, now it's how to make money from that. Okay. These are 4 items that I see as the critical skills for traders. Understanding market volatility and leverage. Not just understanding it, but not just knowing it, but understanding it. Commodities are volatile. We just talked about 15 to 20% moves inside of 20 days. Could you imagine the stock market increasing or decreasing by 25%?
And shut it down.
Yeah. I mean, we're talking 2008. So understanding the market volatility and leverage, and now skills and experience. You need to learn by doing, and always study. There are always read a book. Read a book every week if you can. I've read every technical analysis book there is, and I've lived in the energy business for over 25 years, and understanding that, because it is not a stable, static market. What can work one day or a year ago, for instance, Bill talks about storage and the 5-year average, because what does the 5-year average include, Bill?
5-year average includes it includes 2020, which always is a anomaly in the storage world because we had a lot more storage. The other thing it has is we show no growth in storage, but yet we show growth in demand in electricity for natural gas and other actors in it. So it means that we have less and less storage to pull on for more and more demand. And
Right.
so just looking at an average, and I learned a long time ago, the word average to me means wrong. It's
Well, let's look at it this way. When we look at natural gas on the storage spectrum, what do you see? They started releasing the data in 2010. What you can see is we haven't really we have kind of a general range of outcomes, and that range of outcomes hasn't changed. Meanwhile, meanwhile, as we've changed that outcome, our production, this one only started in 2016, but from 2016 we went from 70 BCF a day to over 105. So we increased basically a third, 30% since 2017, and we have the same storage. There's going to be some issues as a result of that. And that gets back to the previous one, understanding the slower changes and the rapid changes.
right.
So it's important to understand both of those, and always study. Don't take any one person's thought process and use it blindly, because that's a quick way to damage yourself. Um, Risk management. This is the most overlooked and actually the only thing that matters. If you have a trading win percentage of 20%, many people will assume that you're losing money. Not necessarily. Depends on the risk and the reward. What is the risk and what is the reward? If you make 100 times your money in that 20% and you lose 1% 80 times, you're going to be way ahead. So the fact of the matter is that it depends on your risk reward ratio, what your risk appetite is, and this is going to change person by person. There is not a magic key or magic formula. However, there is math and there are things that can help you, and we provide some of that risk management to our customers in our Discord group, in our Rogue Advantage platform. So we provide that so that you can make the best decision. But risk management for traders, one thing I would say, we're going to talk about producers and consumers here in a bit. But for traders, risk management, I would go read a book about the turtle trading strategy. I don't have a link to it. But if you reach out to me, if you email me, brian@energyrogue.com, I'll send you a link to the Amazon book. But it's a book on the turtle trading program. And if you study that program, it's not because the turtle trading program is the golden, the holy grail. It's not. It is a very good system, but it's a breakout system. It was taking volatility. It would put volatility in a range, and then when it broke out, it would buy or sell outside of that. But the magic in the turtle trading system was how it managed risk. It had a very mechanical, methodical way to manage risk. And if you incorporate that risk management into your trading, your returns will increase. Not financial advisors. Read all the
Right.
disclaimers below. I'm not going to say any buy or sell. I will always throw out my opinion. My opinion is my opinion, and it is not trading advice. Do not listen to me blindly. As I like watching, every time I watch something on YouTube, I'm just a guy on YouTube, man. So
Yeah.
don't listen to a
So
guy on YouTube.
the biggest thing in risk management, you got to learn how to take the emotion out of it. Because if you're trading emotionally, you need to stop, put everything down, and walk away for a day or two. The other thing is that you will find that when you are when you're trading with imaginary money, you have a higher risk tolerance than you do when you're trading with your own money.
Yep. Yep.
And so that's something that most people, it surprises them when they do that. So that's why we say always study, always learn, because once you have your own trading plan and you've reasoned out all the reasons you do things, you're going to have at least a plan.
Right.
So
Yep. And so risk management is key. Invest in yourself, invest in research, and invest in education. This is going to be key, and always, always, always continue to grow and learn and expand. And let's see, Vicky, will you post this? Yes, I will. Yes, I will. And I think you're in the Discord group. I will post this right now, Vicky. So Vicky, thanks for showing up. I think glad you're here. And if you don't see it on Discord, reach out to me and I'll send it to you. But I'll actually link that right now. So share this one and Discord. And here is
Vicky, as
here.
we've been talking for years, the next point is all about you, is invest in yourself.
Okay, there we go. And if you're not on Discord, just let me know. So invest in yourself, invest in research, invest in education, always, 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 because whatever dollars you are throwing, I probably spend thousands of dollars every single year on education, research, and tools to help me understand the markets, because it is a continuous process. There's no magic button where you have read every book there is. It is just a continual thought process because the markets are changing. So,
Right.
producers, action plan 2025. What do you do if you're a producer, Bill? If you're staring at this price chart for natural gas in 2025, what would you do?
Well, I'm looking here and saying I need to protect my price. I mean, that's what hedging is. When a producer's hedging, you're protecting your price. And so what you want to do is you want to protect the bottom price and keep as much upside potential available as possible. That is what most producers have done a lot of times. Well, I'll say most producers. When a producer hedges, that's what they want to do. I am still amazed at how many producers do not hedge at all in these markets. And so a lot of that has to do with sometimes just cost of buying premiums. But the idea here is that you want to be able to protect your price. And when I see 2025, I'm looking out there and trying to protect that December price and trying to protect that January price.
So you would protect this price and this
Right.
price.
And
And
probably November as well.
a little known trick is any annual maintenance, if you can squeeze it in right here so that you are not delivering during those months, you've just improved your annual income by probably somewhere between 20 to 30, no, probably 15 to 30%. So
The
probably
other thing is,
15.
if I'm going to drill a well, I'm probably going to drill it sometime up there in April and May, so that when I bring it on for production, I'm above that $3.20 price.
Right. You want to schedule that to come on in July or onward so that you can
Right.
capture some of this upside. So
Especially with that flush production.
yeah. So this is just one of the strategies. There's multiple things that you can do as a producer, but also as an end user. Let's take the end user perspective on this. If you're looking at this chart, you actually want to see if you can store as much as you can and buy as much as you can down here. And you want to figure out, is there some way to store molecules here to actually not take delivery those months? Probably not, but it's worth an exploration. Could you? You know,
And if you already have storage, you want to look at that to see if that will bring your average storage costs down for the
yes,
molecule. And that's
yes,
what you're always looking at the time. You're looking at what your average cost is for the molecule you're about to burn. And
yes.
so I think this goes to a very complicated uh, trading thought process that I heard one time is that I think it's called buy low, sell high.
I think I've heard of that strategy. It's a good one. It's one of the ones that I learned when I was investing in myself and in research and in
There you
education.
go. There you go.
So what is the action plan for producers and users? What do you need to know? You need to know market analysis and forecasting. What is actually happening to the price for the year? And not just that price, but also where specifically your production is actually positioned in.
Located. Right.
And so that is
Uh,
key. And understanding the market analysis forecasting, not just volumes but also price. And then take a look at hedging strategies, which are going to provide guaranteed returns. Again, not trading advice, financial advice, not a financial advisor. Read the disclaimers below, but this will protect your income flow. And you can use swaps, you can use options, you can use futures, and there's a lot of fancy names and fancy terminology, but you are essentially guaranteeing a particular price. And depending on your strategy, you may want a collar strategy that protects your downside or protects your upside. So there's multiple strategies, and it's not a one size fits all.
right.
Cost
And
man,
you also have to look at hedging not just the actual NYMEX price, but also the basis. So if you are located far away from Henry Hub, you need to understand what the basis means and how you can hedge that and and be able to manage the whole cost of your supply chain.
Yep. Well, and think about it this way: is when you think about hedging, a lot of people want to make money with your hedging. That is actually a misnomer,
Right.
and that's
That's
something that
trading.
a lot of people think they want their hedge in the money, and there is actually a longer viewpoint and longer rant. I'm not going to go into that today, but hedging should be akin to paying your home insurance.
Right.
It should be a protection. You are going to pay some. There is not a free lunch. You are going to pay some, but you are protecting your income. So, and you are protecting your income if you're a producer. You're capping your expense if you're an end user. So, those are two different aspects or two different angles on the production side. You're trying to ensure you're getting as much as you can. And on the end user side, trying to make sure you're not going to pay any more than X. So again, there's a lot of different hedging strategies. Reach out to us. We help clients with this all the time. So feel free to reach out to us if you are interested. Book a meeting via Rogue Advantage, and we'd be happy to talk to you. So on the cost management, it's not just the cost. A lot of people start with just the cost. It's not the cost, it's the revenue and the expense, and taking a look at how those work together. And then lastly, risk, risk, risk. How do you manage and leverage that risk for you, not against you? And if you are looking, if it is October 23rd, 2024 right now, and you are planning November and your budget for November, if this is your first pass at budgeting for November, you're too late. You need to have an
Yeah.
annual plan, a monthly plan, a weekly plan, and a daily plan. And now it doesn't mean you have to do it every day, but you should evaluate it every day because that risk in the last 20 days has changed by 20%.
Happy to set
So,
benchmarks so that you'll know when it's time to take action.
well, think about it this way. If you're an end user and you see that drop of 20% in the last 20 days, um, yeah, I want to I want to capture a little bit of that. If you are a producer and you didn't protect your income and you saw that, well, your revenues are at risk. So
Right.
this is part of the reason that these are the things you need to know: market analysis, forecasting, hedging strategies, cost management, and risk, risk, risk. Um, Producers and end user. This is your action plan. Protect your income. And by income, I mean on the end user side, you are protecting an expense. On the producer side, you are protecting a revenue. So use these market cycles, to work for you. When we look at 2025, a producer doesn't want to produce during these times, but a consumer wants to buy as much as they can and put it into storage. So that is actually two different strategies using the market cycle for you, not against you, because that will come into play.
An
Develop your
example of
revenue.
this is I saw an end user at one time who had a high energy cost in their manufacturing, and they would shut down for 2 weeks at the end of the year for two reasons. One, it gave their employees a good vacation, and they would continue to pay their employees, but their energy costs would go down on an average for the annual basis because that's the time when it's the highest. And
Right.
so these are there are things that you can do that doesn't seem like an energy plan. I knew by knowing the person there that was part of their energy plan was to have those 2 weeks off. And people thought they were crazy because they think manufacture, manufacture, manufacture. But that's when the time they came in and did their maintenance and did all that stuff, so that their costs for that was limited.
Right. Right. Well, and that's where these market cycles, I mean, that's a very practical example of how these market cycles work for you. Or it can work for you. It can work against you if you don't have a strategy. And speaking of strategy, coming up with your revenue strategy by year, by month, by week And in looking at 2025, I would look at this curve. If you're a producer, I look at it one way. If I'm a consumer, I look at it a different way. So looking at the forward price and what does that mean for you, and developing that strategy by year, by month, by week, so that you have an idea of where your North Star is. So developing that revenue strategy and developing that so that every month you have a strategy and you execute upon it. So, and then by week, as we said, in the last 20 days, we've dropped 20 some odd percent. What do you do? How do you manage that in the moment? You have ideally done some hedging to protect your cost overruns, or you're capping your cost if you're an end user, or protecting your revenues if you're a producer. Then it gets into management of the hedge, management of the production. There are different tactics and tools, and these are blocking and tackling things that can add 20+% to your bottom line without changing your underlying business. Imagine creating 20% added to your bottom line right now without investing more capital, without investing in equipment or extra
Right.
people. You know, this is well, I don't want to say it's cost free, but there are tools at your resource, and the cost or the expense side is going to cost you something. It's either going to cost time or money. Ideally, you want to spend as little as possible on both of those, and that is that comes to your design. So how do you
But the
use that?
difference is you're not manufacturing anything with this type of expense. And
Right,
so whatever comes out of here goes directly to your net revenue.
right. So develop that strategy. Then you use cost management with your hedging. How do you do your expenses? How do you do this? And don't just evaluate that cost management with the hedges, but also look at what the end result is going to be. And don't just evaluate risk, but manage risk. And what's the difference between those, Bill?
Well, I can say, hey, look, I'm standing in the middle of the track and there's a train coming. Well, I've just evaluated the risk. When I manage the risk, I step off the tracks. And that's the difference.
Right.
And so you can sit there all the time and listen, there's a train coming, there's a train coming, there's a train coming. You never get off the tracks. It doesn't matter if you evaluated the risk, you got run over by it anyway. So you want to evaluate the risk and you want to be able to manage the risk. And you need the tools and the education to be able to do that. That's where we come in to help.
Right. Well, and that's the thing is how do you manage that risk? And managing that risk is the most important part of the cycle. So again, we are accepting questions. So we've got one more slide to go through, and then we're going to let you get back to your day. But we've got one more slide to go through. But if you have any questions, please ask them in the next 10 minutes, because then we're going to wrap up. But for producers and users, how to protect that income, how to protect that expense is key. And then lastly, invest in yourself, invest in research, invest in education. That is super important. People look at programs all the time and they're like, wow, this program costs a couple $1,000s. Well, how much risk, how much income risk is inside of this right here? Let's just take a quick example of what that may look like. So let's actually map this out. So we have what was the low month here? We had a $2.76, $2.76, and then we had, what was it, 380, 389, 3.89. So I'm picking the high and the low. But if you have a production company and you are doing 1,000 MCF a day, and now I'm skipping over some things like processing and whatnot, but roughly equating that to 1,000 MMBTUs. If you have a month, 417 times this, you have, what is this? $118,000 for that particular month. What about in the low month? Is your business situated for a $40,000 swing, roughly, or yeah, 30%, a 30% difference inside of 12 months, you have a 30% difference between the high and the low. So how do you manage that risk? If your business has a run rate and you need that 118,000 or you need 100,000, how do you manage that to protect that? How do you survive in the months that you have 83,000? Conversely, if you have an expense budget at 83,000 at the 276 month and you have a month that comes along at 118, how do you manage that risk? Now let's think about it this way. Does $1,000 seem like a lot to protect the difference between 34,000? Does $10,000? How do you manage that? What do you invest in yourself? I'm trying to
So,
make sure that you're
so
putting
Brian,
things in perspective.
just to show the impact of this, let's just say that we took in this low month, this 1,000. Let's say we took 500 of that and moved this production to the higher month. So
Yeah.
we had 500 in the low month, but we took it to, and all you have to do is look at the high month and just add 500 a day to it, and you're
Let's
going to have.
let's actually make this pretty simple and say the average of those two puts you at $1 million of revenue. I'm just pretending that's the average. Or no, actually, we can find what the curve looks like right down here. I think no, it's on a different page. I'm gonna go right here to the dashboard. And for 2025, we're at 315. So equals 3.15 times 1,000 times 365. And on an annual basis, your income flow is 1.14 million. And if you just changed that 500 and you did that maintenance, you would have added $17,000. So just one little trick, and you would have added 1.4% to the bottom line. 1.5% without doing anything different. Well, doing one thing different, but you're actually going to have what the compounding effect. And I did this wrong, but this is equals, and I'm going to call it 500 times 30.417 times, because I actually think my formulas were messed up. And yeah, no, that equates to 17,000. So that's what we're looking at. If you're able to do more volume than that, it results in 3%. So that is just an example of how you can use
Right.
resources, but don't get caught up in the cost. If you get caught up in the cost, you're going to talk yourself out of everything, and action is key. So your action plan for today, if you're a trader, I want you to do a couple things. Outline what you would do to understand supply and demand dynamics. There's different sources and resources. We have a tool, we have a resource that provides supply, demand, geopolitics, weather, all these changes, regulatory, technological, technical analysis. All of this is within Rogue Premium. So we have a tool that would provide that. But there are other tools. There's other free resources out there, but you will spend a lot of time. So if you're a trader, take this action plan and develop a thought process. What are you going to do to understand supply? What are you going to do to understand demand, geopolitics, weather, other changes, regulatory, policy, technological advancements, market sentiment, technical analysis, investment flows? What are you going to do for that? And if you are a producer or an end user, What are you going to do for market analysis, for forecasting? How are you going to address that? Are you addressing that? And if you're not, how are you going to address that? Hedging strategies, have you contemplated it? Have you thought about it? These are important factors. Cost management. It's not just cost, though. This is about cost and revenues, and then
Right.
risk, risk, risk. How to manage
And
and leverage that risk for you.
on the cost side, it's when the appropriate time is to take those costs.
Yep. Yep. And just to close the loop, Vicky, if you're still online, I did email it and I did also put it in Discord. So hopefully that got you there. So thanks so much. I really appreciate you and I hope to see you soon. But I think this is all I wanted to cover. But did you have any observations or thoughts, Bill?
Well, I just think it's important that all these are tools. They're not the end all to everything. They're tools. And what we want to do is not only give you the tools, but help you learn how to use them so that you can create what you need to create. And so that's what we do. We have got
Right.
years and decades of experience to be able to help you do that. The only other things I want to shout out to Caleb. He says he listens, but he never can comment. So Caleb, we know you're out there. Tell those crazy girls I said hi, and tell Amber to look in her backpack for an envelope. See, now we go. All those secret things go out there.
Awesome, Vicky. I'm glad you got it. So listen, I think that's all. I think that's all we have this week. But next week is gearing up for Halloween, and when
Where he
often
made it.
when trading and budgets and everything come into play, a lot of people and
Right.
a lot of people approach the market and expect.
No. Do you believe in the boogeyman?
And there's a lot of people that prey on that. It is about making practical, sound decisions. And we did have Caleb. Good to see you. Well, hadn't seen you lately, but good to see you. Glad you popped in. And let's see. But
What we're trying to do is help you make your business successful. Because the last thing you want to do is come to the end of the year and you look around and your profits are down and you're going,
I see dead people.
yes, we do not want you doing that.
or there's also a simple test. If you wake up at 2 a.m. and you're worried about your trade, your hedge, your
Yeah.
income, or your cost, you need to step back and actually be rational and
Right.
implement programs. And we actually are developing a program right now. It is in beta. And actually, Richard, if you're watching, I'm going to run it past you tomorrow. And we do have a program. You can sign up for Rogue Advantage and sign up for a meeting if you're curious about that for you and your company. So we do have that program and it is in development, but it's coming out. And so it's going to be super special. So I think that's all I had. I think that's
All
all
I
I
have,
had.
folks, the weather's going to change here in a little bit. So I want you to be paying attention to WX Rogue and be following with Brendan. We'll keep you on track of the weather. And, natural gas, there's only three things this time of year that matter:
Weather.
weather, weather, and weather.
So
All right,
listen,
folks, we'll see you.
thanks so much. Hope to see you next week. Thanks for showing up, and do drop us a comment, and do drop us a like if you appreciated it, or if you have ideas, if you like this type of content, which is a little bit more structural on what you should approach. Let us know. Let us know what you're thinking. If you like it, great. If you don't, let us know. We want to hear from you. So thanks so much. So we will see you next week, same time.